Why has the market not crashed this morning? Many were expecting the markets to go down 50%. That was the name of my opening bell show this morning. However, we can see that this is the reality. The markets are actually up. They like it. Well, there's lots of reasons why, and I'm going to explain some of it here for you, but also to let you know of the upcoming video after this. I'm making this in a live stream. All my videos are made live, so I can talk to my audience as I do them. But this morning, later on in the day, there's going to be the history of wars. And in fact, I will prove to you and show you over history from the beginning of time, actually, it's better to remain in the market and have money available to buy the dips, because very often the dip is not as much as you think. Very often it can actually be a gain on the announcement of a war, because it solves a problem and most importantly takes away uncertainty, and you will often miss it. So it's very often the case to stay in the market. However, we've got bigger issues with the markets crashing. That comes in a couple of weeks with the yen carry trade. So my 50% crash potentially still stands. So why are the global markets brushing off the US strikes in Iran? Market reactions after the US strikes have been less aggressive, especially relative to just over a week ago when Israel launched airstrikes against Iran. It's quite incredible, really, when you consider how that news drove the markets down. But potentially starting World War III seems to be a catalyst for the markets to go up. It's because of uncertainty. That is the key to the stock market. The markets view the attack on Iran as a relief, with the nuclear threat now gone for the region, said Dan Ives, managing director at Webush. The US joining the war between Israel and Iran might seem like geopolitical flashpoint that would send markets tumbling. Instead, investors are largely shrugging off the escalation, with many strategists believing the conflict to be contained and even bullish for some risk assets. If you're enjoying this, please do tap the like button. It will share it out to more people, and consider subscribing as well, because we are very, very close to our 100,000 subscribers. And if we get there, when we get a silver plaque on the wall, and you'll all be invited to a special event. Here is my subscribers now, rolling around once again. Thank you very much indeed. 86,011. Thank you ever so much, everybody who has subscribed to us and become one of our 2,000 members as well. So thank you for that. As of 1 p.m. Singapore time, the MSCI World Index, which tracks over 1,000 large and mid-cap companies from 23 developed markets, declined only 0.12%. Safe havens are also trading mixed, with the Japanese yen weakening 0.64 against the dollar, while spot gold slipped 0.23 to 3,360 per ounce. The dollar index, which measures the US dollar against a basket of currencies, rose 0.35. Now, my strategy would be consider not selling tech, which is the most profitable businesses. I know I'm tech myself, being on YouTube. What I do for one person, I can do for 1 billion. My profits go up. Tech is why you should invest in tech. It solves problems, but it's also the most profitable, and it's also at the top of the S&P 500. If you sell out and then buy gold, yes, gold goes up, but then everyone sells it then to buy back into tech again. I would just suggest you stay exactly where you are. But there you go. What do I know? Anyway, let's move over to our next section. In general, the market reactions after the US strikes have been less aggressive, especially relative to just over a week ago when Israel launched airstrikes against Iran. The markets view the attack on Iran as a relief, with the nuclear threat now gone for the region. Has it gone though? We don't know. The markets certainly assume that it has. We could find out later that it actually hasn't gone away, but that's where we stand right now. Adding that he sees minimal risks of the Iran-Israel conflict spreading to the rest of the region and consequently more isolated. Well, there is an argument, and I will suggest this to you as well, that because the way Iran started the war with Iran, they are weakened. Hezbollah and their other proxies and those that might have supported them are weakened, if not completely weakened, and of no real power at all. So there's a real possibility, particularly after Trump visited the region and did great deals with Saudi Arabia and others in the area, that people are looking forward to a much brighter economic future, and that Iran, who has suppressed its people, because the people don't want all this fighting, just our sensei, I think other regions might actually go, do you know what? We want to be part of this AI boom and tech boom. We want to be part of it. And we're sick and tired of the constant blowing things up. Doesn't really solve very much, does it? And I don't think they're going to get much support. And tit for tat will go on for a while between Iran and Israel. But I think that it could all go away quite quickly. But we still have to prepare our portfolio for bigger drops. And the yen carry trade is, in my opinion, bigger than this. Anyway, while the gravity of the latest developments should not be dismissed, they are not seen as systemic risk to global markets, other industry experts echoed. Now, we have to be concerned about the oil, however, but when it comes to the majority, financial and tech, it doesn't care about this. In fact, as we said before, it sees it as a solution and taking uncertainty off the table. On Saturday, US President Donald Trump said the United States had attacked Iranian nuclear sites. Traders are now keeping a close eye on any potential countermeasures from Iran following the US strikes on its nuclear facilities. Iran's potential closure of the Strait. Now, this is an issue with oil. You might not care about oil and you might think EVs are the future. Well, they kind of are, but we're always going to use oil. And when oil gets disrupted in the Straits, we often get issues around inflation, but we've got no inflation. The markets are reading this wrong. There is no inflation. But if oil goes up dramatically, and I don't mean $60, $70, $80, I mean over $100, that's when we could have concerns. Iran's foreign ministry warned that its country reserved all options to defend its sovereignty, according to Iranian safe media. The country's parliament has also approved closing the Strait of Hormuz, a pivotal waterway for global oil trade, with about 20 million barrels of oil and oil products traversing through it each day. However, this will not happen until it's agreed by the Ayatollah. It all depends on how Iran responds, said Peter Bukvar, Chief Investment Officer at Bleakley Financial Group. If they accept the end of military nuclear desires, then this could be the end of the conflict and markets will be fine, he told CNBC. Bukvar is not on the view that Iran will carry out the disruption of global oil supplies. I agree. I don't see that it's not in their interest to do so. The worst case scenario for markets would occur if Iran were to close the strait, which is unlikely, said Marco Papic, chief strategist at Geopolitical Strategy. I agree. Remember what I said a couple of days ago, that we are not World War I and World War II, where in World War II, particularly with Adolf Hitler, tried to set up his own businesses and trades and, controlling the world. We don't live like that now. And World War III, I don't think will ever happen. It makes no sense. I know a lot of things in life don't make sense, but they still happen. But there's no benefit to anyone. So why would you blow up yourself? It's kind of pointless. We are a global economy now. We wasn't in World War I and World War II. If they do, oil prices will go north of $100. Fear and panic take over. What will happen is people will buy oil all of a sudden, and then it will go up to $100. Panic will ensue. Stock markets will go down. Eventually, everybody will sell their oil. Just ask our oil expert, Stephen Lewandowski. They'll sell their oil, and they'll buy back tech, and tech will go back up again. Just buy the dip then. I mean, it's quite simple, really. If you take yourself out of the problems and become the solution rather than the problem, you'll always win. I've demonstrated this on my show. Every trade I'm winning all the time just by simply buying the dip. And I don't mean dollar cost averaging either. That gets overlooked and overused. Dollar cost averaging, oh, just buy the dip. You've got to wait though. You've got to have patience and use tax lots to be able to time the bottom, and you literally can, and then trim back the overspend. I do it all the time. You've seen me do it. I've demonstrated how it's done. You don't just dollar cost average. It's just a very simplistic way of doing things, and it's nowhere near that good. Because if you just start dollar cost averaging and buy on the way down rather than at the bottom, what happens is you don't make much money, and then it goes further down and you can't buy the dip, and you're waiting around for years to get your money back. You got to buy with conviction. We call it buy like Buffett. Do you think Buffett dollar cost averages? He waits for it to be undervalued and then buys it all. And I do the same thing. However, markets are subdued now given the limited tools that Tehran has at its disposal. At its disposal. I don't think Iran has got any power now to do anything other than send a few bombs into Israel. The idea of shutting down the Hormuz waterway has been a recurring rhetoric from Iran, but it has never been acted upon, with experts highlighting that it's improbable. In 2018, Iran warned it would block the Strait of Hormuz after the US pulled out of the nuclear deal and reinstated sanctions. Similar threats were made in 2011, 2012, when senior Iranian officials, included then Vice President Mohammad Reza Rahimi, said the waterway would be closed if Western nations imposed more sanctions on Iran's oil exports due to its nuclear activities. Tehran understands that. If they were to close the strait, the retaliation from the US would be swift, punitive and brutal, Papik added. In a similar vein, Yardeni research founder Ed Yardeni said the latest events have not shaken his conviction in the US bull market. I absolutely agree. It's why I'm fully invested. I'm not going anywhere. And you can see as we come to the bell, the markets are rallying again. The bigger issue is the yen carry trade. Financial issues, if you look through history, are far more destructive than wars. The Great Depression, the dot-com crash, the housing collapse. These things are far more destructive, I know it sounds crazy, than dropping bombs on people. Geopolitically, we think that Trump has just re-established America's military deterrent capability, thus increasing the credibility of peace through strength mantra. He said, adding that the targeting 6,500 for the S&P 500 by the end of 2025 is exactly what I've been saying forever. So yes, I'm fully invested. All my money's invested. I'm not going anywhere. Absolutely. While predicting geopolitical developments in the Middle East is a treacherous exercise, Yardeni believes that the region is in for a radical transformation now that Iranian nuclear facilities have been destroyed. This could be a catalyst to the upside. Think about that for a moment. We could see the markets rally as opposed to selling off. Let me just do my face on my screen. I know it sounds silly, but that's what I have to do. So there we go. What do you make of that? The title of our main live show today was a 50% crash. You have to be prepared for it. It's more likely to come in the next few weeks with the yen carry trade, or maybe it won't. And listen, if the markets rally 10% and then another 10% and then another 10% and we go down 50%, well, we're still up from where we were at the beginning of the year. So does it really matter? Well, for a long-term investor, no, it doesn't. Buy the dip, people will say. You don't buy the dip, you buy with conviction at the bottom using tax lots. And I've shown you how to do that many, many times. A couple of days ago, I traded $40,000, in fact, $39,800 live on the show. This is what I do. You see that V shape there? This is my 1 year. Over the year, I've been buying, nibbling away, but when we had Liberation Day, I turned on big time the margin, refinanced, got a lower rate, bought more, and went crazy. I was buying 50 shares of the S&P at a time, very often on the same day. all the way down. And that's why I've had that massive recovery. That's why I've made more money this year than Warren Buffett, percentage-wise, not literally, percentage-wise, the Robinhood Managed Fund and the S&P. I didn't buy the dips. I bought the bottom with conviction. How do you time the bottom? You can just buy and then use tax lots to return the stocks that you pay too much for on the way up, and that way bring back your balance on your margin into manageable levels. So there you go. That's where we are. We're 8 minutes to go before the markets open. Are we going to get a rally? Could it be a rally today? I've no flipping idea, nor does anybody else. But I am fully invested. I started with $5,000 4 years ago in 5 days' time. In fact, on Friday, it'll be our 4th anniversary of the show. I started with $5,000. I have now got invested $397,000 in my main account, $38,000 in my Roth IRA from $5,000. I've never done options, I've never done shorts, I've never done crypto. I only own the S&P, but I buy with conviction. And when it goes down big, I buy big. And it didn't start big, it started small, but now it does. In a few years from now, you will see me do $1 million trades live on the show. You'll see it happen and it'll become a regular occurrence, and I won't pay tax doing it either. So there you go. That's my story, that's my journey, that's my belief, and that's what I'm doing. This is my real money, all my money. There's no money in the bank, there's no money in cash. I use Robinhood as my bank. Literally, they are now a bank and a credit card and a brokerage, and I do everything through my Robinhood. So there you go. If you like Robinhood, by the way, there is the Robinhood USA and Robinhood UK links in the live chat, and everybody else watching will find it below in the description later on. Click above my head. I made this live. I make all my videos live. I like to make them with the audience watching. It's real, accountable. It's all part of the live shows. Down below in the description, in the comments, you'll find all the links. Over here, I'll probably put Sensei's show today. Sensei is going to do a chart show, kind of backing all this up. Not because I said so. He will do what he wants to do, but I'm pretty sure he will. The charts will be here today. And down here, I shall put a video, which I will be making later to go out after Sensei's show. And that'll be the history of wars. The history of wars will show you that over time, you always win by simply staying in. In fact, the crashes are not often as big as you think. More often, in fact, they are actually rallies. The biggest things to concern yourself with are financial crashes, Great Depressions, things like that. And this is not one of those. This could be a solution. Until next time, as always, take care of yourselves and each other.